Hello everyone, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and today we're looking at a week filled with crucial economic events that could significantly impact the markets. Let's break down what's ahead. First up, the Federal Reserve's decision. The Fed is widely expected to keep interest rates on hold after its two-day policy meeting wraps up on Wednesday. However, the real focus will be on the updated dot plot, which will likely indicate fewer rate cuts this year. Most analysts now expect 25 basis point cuts, down from 3 projected in March. Recent jobs data showed both job and wage growth, which has led the market to push back the timeline for rate cuts, now eyeing September for the first potential cut. Now, speaking of inflation, Wednesday will also bring us the May inflation figures just hours before the Fed statement. If the data shows further signs of easing inflation, it could solidify expectations for rate cuts later this year. Wall Street is especially hopeful, with traders still pricing in some monetary easing. A worse-than-expected inflation report, however, could reignite recession fears and shake up the markets. On Wall Street, the big question is whether the Fed will open the door for a rate cut as soon as September. This year's market rally, with the Standard & Poor's 500 up more than 12% year-to-date, has been fueled by hopes of a soft landing, cooling inflation without stifling growth. But mixed economic signals have created some uncertainty. For instance, while the recent jobs report was stronger than expected, earlier data showed a slowdown in manufacturing and a downward revision in first-quarter growth. Turning to the UK, all eyes will be on the latest jobs report on Tuesday to see if wage pressures are easing enough for the Bank of England to consider a near-term rate cut. Average weekly earnings have been rising significantly, and with minimum wage increases, this trend might continue. April's GDP data, due Wednesday, is expected to show a slowdown after a strong first quarter. Meanwhile, in Japan, the Bank of Japan's Governor Kazuo Ueda has hinted at a tapering of the bank's quantitative easing program. As the BOJ concludes its meeting on Friday, markets are watching for a possible reduction in bond purchases. While this move could impact the bond market, its effect on the yen remains to be seen. The BOJ and the government are cautious, as a weak yen could disrupt the desired cycle of mild inflation and steady wage growth. And finally, OPEC is set to meet on Sunday to discuss output cuts. The group is likely to extend deep cuts into 2024 or even 2025 to stabilize the market amid tepid global demand growth, high interest rates, and rising U.S. production. Oil prices have been under pressure, and any decision by OPEC Plus will be closely watched. So, from the Fed's meeting and inflation data to global updates from the UK, Japan, and OPEC, this week is packed with events that could drive market movements. Stay tuned and stay informed. That's all for today's Capital Markets Quickie. Tune in tomorrow for more updates and market insights. Have a great week, everyone.